Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what big players, so institutions in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structured zone for this market. In fact, this area was already acting as previous resistance starting from here. In multiple occasions, the market has tested this zone, respected it as resistance and rejected it to the downside. Now we just got the break above the zone. The market then went and retested the area and is currently in the process of rejecting it to the upside. And that is exactly what you would expect in a situation like this. In fact, if you have a strong level of horizontal structure, which continues to be respected as resistance in multiple occasions, and then the market breaks above the level, at that point, all that previous resistance is supposed to be turned support. The market goes and tests the area in multiple, usually in multiple scenarios, and then rejects that zone to the upside. That is how usually you would expect this kind of situation to play out. And that is in fact how the market has reacted. It reacted in a quite textbook manner, going and retesting that zone and rejecting it to the upside. So right now what we have is a rejection away from historical support in the form of this very strong impulse, and now already the start of a correction. Now in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice is that at the moment we have the 0.32 retracement currently lining up at this area, meaning that this market has more room for some short-term bearish continuation before then usually the market would follow with the continuation to the upside and the continuation of the creation of higher highs and higher lows. So essentially the definition of an uptrend, because an uptrend is simply a series of impulses and corrections in which every time the market is creating new higher highs and at the same time also new higher lows. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, what we can notice is that all this area is quite important structure. In fact, this zone was acting as previous resistance, then the market broke above the level, and that previous resistance was turned support here, again here, and currently it is acting as support as the market is testing that zone, and there is a good probability of seeing a potential rejection to the upside being created away from this level. So here in the monthly time frame and also in the weekly time frame, everything seems quite bullish. Now, dropping down on the daily, what do we see? Now, from a daily standpoint, the situation is quite clear. In fact, what we can notice is that the market has just created this M pattern. Now, we spoke about this also in the previous analysis that the market from here it had a good probability of creating this M pattern. And in general, after the creation of an M pattern, you would expect a rejection to the upside and completion of the M pattern at the neckline, which is in fact exactly what the market seems to be doing right now. And by the way, I will link also in the description the previous analysis in which I explained all the reasons for which this market had a good probability of creating the M pattern and then creating the rejection to the upside. So you can go check it out for more free education. But at the moment, what do we have and where we could be looking for the next a potential move for this market. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, net positions have been massively increased. We went from having 234.3k net positions all the way up to having 275.5k net positions. So we had a huge increase of net positioning, making gold stronger. And a strengthening gold makes, from an institutional perspective, makes also gold against the USD stronger, because keep in mind that even though we're looking here at the data just for gold, all currencies and also commodities on this spot are traded already against the USD. So what this means actually is that by looking at the data for gold, we're actually already looking at the data for gold against the USD, which is exactly the chart that we are already analyzing. So in a situation like this, with institutions increasing their net positions, what would I expect? Now, by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to your analysis. So as I was saying, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market inside of this resistance zone, which is essentially the previous neckline, so essentially previous support, not on resistance. So in other words, if the market would manage to go and break above the level, then at that point I would expect more bullish continuation. But if the market would, instead of here, shift back to a bearish market from an intraday perspective, so there is good probability of seeing more bearish continuation from here. So what this means is that at the moment we are at a decision area for this market. And in fact, if we look at it even more broadly, we can easily identify how the market is actually currently stuck in this range, with the top of the range here, low of the range here, and then we have this middle of the range, which is in fact the neckline of the M pattern itself. So unless this market will show us what kind of reaction we get inside of this area, so if sellers will win inside of this resistance zone, or if buyers will manage to breach above the zone, at this point, this is simply a sideways market that really doesn't have anything interesting. It is important as traders to know when the best thing is to stay on the sidelines. So if I was in any way trading gold manually right now and not in an automated way, in a situation like this, I would rather stay on the sidelines if I was involved in this market from a manual trading perspective. So this is just my analysis, and I hope you enjoyed it. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the CO2 data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed, and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.